Okay, a very warm welcome and thanks very much, our guest, Sharjil, for joining us in this series. Firstly, let me introduce myself. My name is Dr. Bilyaminu Auwal Romo. I'm a senior lecturer and course leader at the University of East London. Firstly, a little bit about myself. Before joining UEL, my multidisciplinary research role was at XG Global, which include a software development consultant of 13 million euros, which include designing and implementing a circular economy digital platform. Since then, my interests include open source software projects, also open source component reuse, software maintenance and evaluations. My current research include the use of blockchains in terms of implementing digital platforms, also embedding circular economy. Apart from that, I'm also interested in the centralized application, that is the application of blockchains in implementing digital platforms, fostering Web3 and also NFT domains. So that's a little bit about myself. I'm also a fellow of Higher Education Academy, fellow of Royal Society for the Encouragement of Art and Manufacturing. Also, I'm a certified associate business consultant, SAP. So today, I'm delighted to be hosting this UL Center of FinTech podcast series. And today's topic focus on FinTech and Islamic finance. But before then, let me highlight the activity and also the objectives of UL FinTech Center. So the Center of FinTech at UEL has been created with the aim of building a pipeline of fintech talents that ultimately facilitates the global digital economy. And what we do, we focus more on five mainstream areas, which include outstanding research in fintech, project with commercial relevance, and also engagement with fintech industry, likewise policy and regulatory work, and also fintech education. Um, One of the objectives of the center is actually to be dynamic research group generating outstanding research on fintech that ultimately facilitates the digital economy, and also that also engage industry for providing technology solution in fintech related problems. One of our contribution, of course, include feature trends such as observing trends, services, making predictions on directions of the industry, as well as requisites regulatory policy approach for direction of the industry. We also bring experts together by engaging in projects with address key issues from different complementary perspectives. One of example of this project is actually looking at how we can design and automate insurance system using decentralized autonomous organizations, and also incorporating the aspect of Web3 and also NFT domains. And so that's briefly about the UL FinTech Center. So now moving on to our next agenda is actually to introduce our guest, Sharjil Ahmed, and thank you for joining us today. Sharjil is a tech entrepreneur and spent early part of his career as a seasoned investment banker. He's also the co-founder of Cykube, a UK headquartered blockchain and fintech advisory and solutions provider. He's working on promoting fintech and blockchain solutions in the area of Sharia compliance, finance and investment, halal economy, sustainable development goals, digital transformations, and also financial inclusion. Shajil has gained training certification from the Said Business School, Oxford University in fintech and blockchain. And also he has completed his MBA degree in international business from Anglia Ruskin here in the UK. He's also an industry associate at the University College London Center for Blockchain Technologies. Currently, he's a visiting lecturer on fintech and emerging technology at Coventry University, and also an advisory center, board member at the Center of Fintech at UEL. He has more than he spent more than 15. He has more than 15 years of experience in Islamic investment banking and being involved and funding team members of the Al Rayyan, which is known as Islamic Bank of Britain, Docs Capital, the FIC, to name a few. He's also one of the early starters in the UK Islamic finance scene and worked with the UK government to make London the leading Western hub for Islamic finance. Um, Sharjil also is an alumnus of the International Visitors Leadership Program on special invitation from the US State Department of representing the UK. He also worked with the UAE government in different capacity. So let me introduce our topic today, our main topic of focus in this series. And today I'm delighted to have Shajil, who would be discussing and then introduced, who will be discussing some of the aspect of fintech and also Islamic finance. So at this juncture, I will invite Shajil to perhaps shed some light on how does Islamic fintech different the main fintech that we are familiar in this domain.
First of all, Bilyaminu, thank you very much for your invitation for this a very important series of podcast which you have started. I would like to start with, and it's a very important question which you have asked. You know, it's a first question. There's some negative connotation attached to it, both with technology and with Islamic finance. So let me start with clarifying those two first. But first of all, technology doesn't have any religion. Right? And with regards to Islamic finance or Islamic fintech, it's the mindset is only for one type or one faith group or for particular people. No, it's for everybody, and you will be very surprised when I started my career here in the UK, especially when we launched Islamic Bank here. The majority of our customers, they were coming to us for because we have a competitive product and you are an ethical bank. You know, the way
Mhm.
Islamic banks operate, it's or Islamic finance, the basic principle of Islamic finance is ethical in nature.
Yeah.
So what exactly Islamic finance does? So it is the way. What is important for Islamic fintechs? It's very important for fintechs to build their product or develop their product in a Sharia compliant manner, and it should be uh, compliance with the Sharia. So that is the key. Number two, Islamic finance. What Islamic finance does, it promotes fair distribution of wealth and risk sharing. These are the basics, which is very important. Of course, you know, I don't want to get into the Islamic finance lecture here, but the major difference between Islamic finance and the conventional finance is riba, is interest. And
Mhm.
the definition of interest is making money from money, right? So if I give you £100 today and ask you to give me back 120 tomorrow, there's no justification how you're going to use that £100. So of course that
Yeah.
doesn't justify your investment. But if you ask me, Sharjil, I need £100 today, and I will invest and buy an asset, and then the way once I sell the asset, we will share the profit or loss, and we will define the profit and loss how we are going to share. So this is
Yeah.
this is the way Islamic finance works. Please, Sati.
So, in essence, let's say, as an investor or as a customer, one cannot make profit by actually, using debt or loan offered to individual or customers. In essence, you split the profit and lost, and then, you take that forward. So that's the term that you've mentioned, riba, what it means in terms of the interest you gain by actually giving someone loan while you retain the profit, in essence. Thank you so much. That really makes sense. And I recall vividly, in 2009, when I first opened my first bank account here in the UK, with Lloyds Bank. I was very, 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 I find it very quite astonishing to understand that such product also exists from the main industry or from the main conventional banking that we have here in the UK, like Lloyd banks. And actually that also benefit the customer and at the same times also mitigate risks from both parties. Right. So now we've looked at the Islamic fintech. That is the difference between both. Now, what does it require for fintech, for example, to grow in their respective jurisdiction when it comes to Islamic fintech?
So yeah, I mean, this is very important as we know. What is fintech? First of all, we need to understand, right? So fintech is finance and technology. And being a investment banker, previously, I can tell you the moment you talk about finance, there's one thing straight away comes to your mind, and then sometimes into your dream as well, which is regulators.
Absolutely. Yeah.
Right? So it is very important for uh, us to understand, the moment you talk about fintech, right, financial technology, you need to involve the regulators. If you don't have the
Yes.
regulatory support, it would be very difficult to build the fintech in any country, right?
Correct.
Then we need to understand the fintech ecosystem. Now, fintech ecosystem has various stakeholders, such as consumers, right? Financial institutions, fintech startups, then investors, regulators, educational institutions, right? And if we don't have those stakeholders aligned, it would be very difficult for any country or any jurisdiction to build fintech successfully. They can announce it, but it's very difficult to build it. Now, I think the best example I can give, UK itself, where you and I live. Um, you will be very surprised, and this is the UK government's agenda. So, fintech is one of the key strategic important sector for the growth of the UK economy, right? It means what? So, what UK government has done, they support the and extend the support to all the respective departments
All right.
to assist fintechs as and when it's required. And
Yeah.
why? What does it mean by assistance? So assist means all the regulatory bodies, they are reviewing and developing various uh, procedures and rules and policies and procedures for fintechs to develop in this country and allow fintechs to bring their innovative ideas into fruition. There's a second thing which is very important in the UK. What they have done, they allow fintechs, they ease the rule for fintechs to list themselves in London, right? In London Stock Exchange. And thirdly, government has also started a special visa scheme, a new visa stream, which allows the top talent, global talent, tech talent from all over the world. So it allows institution to bring that talent and work for them in the country, right? So
Mm.
this is very important for any country to build a successful fintech ecosystem. You need all these necessary ingredients. And I would
Correct.
like to just lastly, I would like to touch upon FCA, which is the Financial Conduct Authority. They have set up a regulatory sandbox. Now, what does regulatory sandbox means? So regulatory sandbox means it allows entrepreneurs to test their innovative technologies within the framework that allow fintech and startups to conduct and test their products in the control environment within,
Mm.
so that is very I call it itself as a big innovation, and we have been involved with the regulators in various different shapes or forms, and they are very supportive, and they are very open. They are learning themselves. They are asking us, to come and work with them, so they can build the policies and procedures for fintech to grow. So answer to your question, sorry it's been long-winded, but I think
Mm.
all these stakeholders are very important to come on board to launch successful fintech ecosystem.
Yeah, thank you very much for that. And also, that also just remind me of these two phrases that we quite often use in fintech: the role of regulatory technology, that is regtech and subtech. And I
Right.
think there is really a huge gap in terms of addressing how, when it comes to Islamic fintech, how those regulations, or how those supervisory, but actually ensure that the principles and also the laws of how Islamic finance work is embedded. So let's move on to the next part, and thank you for that. So now that we look at the the different requirement for fintech to grow in different jurisdictions, so why institutions, for instance, go for Islamic fintech and not fintech? We understand that the difference between Islamic fintech from the main conventional fintech or financial services that we have when it comes to interest or products in financial services that are provided. So why institutions go for Islamic fintech and not fintech
Perfect.
in
No,
essence?
it's a very, very important question, Bilyaminu. Um, the first, again, I just repeat what I said, earlier. As Islamic finance, why Islamic finance or why Islamic fintech? So Islamic finance promote risk sharing, right? It connects the financial sector with the real economy. As I give you the example earlier, it's a asset backed, right? It's an asset based banking where whatever you do, you buy and sell commodities or assets, right? And it emphasizes what? Financial inclusion and social welfare. So this is what Islamic finance and Islamic fintech is all about, right? Now, why institutions? If you speak to institutions, banks or fintechs, they normally say we are commercial organizations. Yes, you are. So what is important for any organization to get the bigger pie of the business, right? Even in this country, in the UK, we have noticed, and not only in the UK, in globally, if you look at it, still you will find people who are not using banks. You know why? Or they are
Mm,
not buying even their properties, although they can. You know why? Because there is not Islamic finance or Islamic banking available in their countries, right? And I think this is where Islamic fintech can play a role by bringing one, the inherent nature of Islamic finance, which is fair distribution of wealth, risk sharing, and of course by bringing technology which could be enabler of what Islamic finance basic principles are, right? And I think this is very important. If you study the emerging technologies, this is exactly what emerging technologies are promoting: financial inclusion, make the life easier for customers, and cost saving. And that exactly what Islamic finance is promoting as well. So for institutions to get the bigger pie of the business, they need to go to Islamic fintech rather than fintech. And I just wanted to use some stats here. 4 years ago, when I was reading one of the reports by World Bank, and at that time, 5 years ago, in fact, at that time, there was about 3.2, 3.3 billion people. They were unbanked. And if you read reports today, so there are about 1.6 to 1.7 billion people who are unbanked. But of course, so fintech has, of course, created uh, that help in building that bridge. And I was reading the recent report that out of this 1.6 billion people who are unbanked, majority are from the countries where Islamic finance can play an important role. So
excellent.
that is a brief
Yeah.
answer to my
Yeah,
question.
I think also just to chip in this regard, um, the Islamic fintech or the Islamic finance is quite astonishing to see that when you look at the way it's regulated, or some of the principles that is laid out when it comes to contract or giving out debt. So if you go back to the Quran, there is a verse in Surah Al-Baqarah, in chapter 2, verses 282, and that verse is called the Ayatul Dain, that is the verse of the debt. And
Correct.
it is the longest verse in the Quran where Allah explain in detail in terms of how the financial transaction, is conducted with fair and justice. So you can see why institution, perhaps especially in the Islamic fintech, might opt for such products or services where an individual can dictate between two parties can dictate between them in justice, and also they can also ascribe, by leaving out anything when it comes to sharing of profit and loss. So to move on, now let's look at the use of these emerging technologies in Islamic finance or Islamic fintech. So we understand now we have this the use of blockchain, which is decentralized ledger technology, where we can store record or data in a transparent and decentralized manner or network. So, how blockchain can help in sukuk distribution, especially in Islamic fintech?
Thank you for this question, Bilyamin. I think first of all, I need to for the audience knowledge perspective, I think sukuk. Just would like to touch upon briefly about the sukuk. So sukuk is nothing but it's a Sharia compliant financial certificates, which represent their ownership in an asset, right? In a very simple terms.
Yeah,
Blockchain is one of my favorite subjects, as you and I both have been involved in various research and discussion on that. But very simply, I just wanted to make it very clear why and how blockchain can help in sukuk distribution. So one of the biggest issue in sukuk is or in fact, let me start with Sukuk investments. Sukuk investment is predominantly by institutional investors,
yeah,
right? Predominantly, you will find Sukuk investors. They are institutional investors. If you ask any individual, do you have Sukuk investments? It's rarely you will find anybody who would say, oh, I have investments in Sukuk, unless they have invested through funds, right? But I think with the advent of blockchain, it is very important that because of the fractionalization piece of blockchain, it helps institution to fractionalize the asset and distribute it through using blockchain platform. I think I would like to mention here there's a very small, a micro sukuk being issued in Indonesia, I think in 2018, 2019, by one of the corporates. And that was very small, it's $50,000 sukuk. But what the platform has does, it's built by one of the companies, Blossom Finance, and what they have done, they have created this platform which allows sukuk issuers to issue the sukuk. Now, sukuk issuance itself is a very expensive process, right? So you need to help. First of all, you need to do the book building. You need to get the investment bank. You need to do the structuring. You need to bring all these stakeholders together. But if we can digitize that entire process onto a blockchain, it will help a small sukuk issuers to issue the sukuk. That's number one. Number two, sukuk industry is dominated by predominantly, as we discussed, by institutional investor. So how we can make life easier for individual investors to invest by fractionalizing it. So retail investors by using blockchain platform can invest into sukuk as well, right? Now, the third thing, which is very important, which is from the risk perspective regarding transparency. I mean, if once you invest into a sukuk, even as an institution, what would happen? You are the owner of that particular asset or group of assets under that sukuk, right? And sukuk has been issued for 5 years, for 10 years. But there is a leeway for institutions to change those assets if they wanted to replace those assets. Now, from the user's perspective, from the investor's perspective, they cannot see, the risk profile of the asset which they have replaced by. But with the advent of blockchain, they can see on the real-time basis, the moment the risk profile of any asset changes, investors can see the risk profile of their investments on a real-time basis. So that encourages more investors to come and invest. And I think this is where, from both from the issuer side and from the distribution side, blockchain can enhance the sukuk distribution to individuals and to retail investors.
Yeah, interesting. Yeah. Also, it's worth to note that in the Financial Times report that the UK has raised more than $50 billion through 68 sukuk issuance on the London Exchange, and also this gives you, the why and how it's important, especially for governments and institutions that are adopting this strategy in Islamic finance. Also, right. So now we understand how blockchain can help. Just for the benefit of our viewers, to explain briefly, we all know this technology has many or different benefit or advantage in terms of the provenance, and also the originality, and also the security, especially in the in the developing countries where you have these issues of lack of transparency or in issuance of this certificate. So it eliminates the middleman, and at the same time, it also help in ensuring that the issuance of those certificate is not tempered. In essence, is tempered proofed, because in essence in blockchain, all the data when it's stored is actually distributed, and any changes will also trigger an actions to amend all the ledgers. So thank you for shedding some light on scope distributions and how blockchain can also help in that. And now let's look at different aspect of this technology in terms of how we can actually use this in reducing the cost of Islamic product. One of the main thing that customers would quite you hear, as an experienced investment banker, is that Islamic finance or Islamic product are very expensive. So how can this technology, especially with the emergence of these digital banks, which actually reduce the cost of operations, and also, of course, we don't want to say that, when you have digital banking to also eliminate, the staffing or the human resource factor. But again, it also creates other opportunities, especially in the industry. So how can this help in reducing the cost of Islamic product?
As you rightly mentioned, Islamic finance has always been criticized in a way that it is expensive. Yes, it is, but it's not because Islamic banking industry wants to be expensive, but it's of course banking works on economies of scale. But I think this is exactly where now Islamic fintechs can make a lot of difference by deploying these technologies, right? The complex structure of Islamic financial products can be digitized with the use of we have talked about blockchain, we with the use of smart contracts, for example, right? You can digitize the entire process flow. We have mentioned about the sukuk issuance, which is that is the best example. Sukuk issuance on blockchain can reduce the cost of structuring, cost of building the product significantly. And I think with the use of emerging technologies such as AI, big data, blockchain, and open banking, which I don't call that technology, but open banking is a regulation, PSD2, which issued approved in 2019 in Europe and in UK, can significantly change the dynamics of the entire fintech and Islamic fintech market. Yes, so with the use of emerging technology, this can significantly reduce the cost because you won't be dependent on individuals, to manually do the transactions. 80-90% of Islamic banking, 80-85%, I must say, is based on commodity murabaha. And commodity murabaha itself, you need various stakeholders. That the entire process can be digitized using a blockchain, and literally on a real-time basis, even people can see and investors can see
Yeah.
how much of the commodities currently present. As you rightly mentioned earlier, there's a lot of warrants or papers sometimes issued, which is not real. But with the advent of technology, and especially with blockchain, I think those negativities can be reduced, and it can bring seamless and process. It can bring seamless process for the entire Islamic financial transactions.
Yes, of course, especially in fintech, this red tech solutions that are currently emerging in terms of to ensure those regulations are embedded, automated on top of those digital platforms or solutions, in Islamic fintech. And I think that is also a key, a significant, avenue where researchers and also experts perhaps can explore and providing RegTech or SubTech solutions to ensure that the principles and laws are upheld and applied when building digital product in Islamic fintech. So again, that brings us to also highlight some of the things that imagined things in fintech. And as you know, you've mentioned having institutions that are built with strong with legal framework that also enable the automations and also upholding those regulations is key. Just recently, I know you might be aware that the UK Chancellor's spending review last year, in which they announced an independent review of UK fintech, which is led by Sir Ron Khalifa, OBE. That is for the creations of new private sector-led organizations, the Centre for Finance, Innovations and Technology. And this is to ensure that the UK is the global leader for financial innovation. So there are really a lot of activities, a lot of, institutions, legal framework being designed and built, to promote digital of financial technology, especially in that area. So thank you so much, Sharjil, for joining us. It's
Thank
really
you.
been very insightful and informative to hear from your experience, especially from the aspect of Islamic fintech, which we do. So in this series, our next series, we will focus on other aspects of digital technology, such as NFT domains, and also the use of Web3 or decentralized web to foster financial Islamic financial technologies or product and solution. And I think this is really a very important area to consider, considering the paradigm shift now from Web 2.0 to Web 3.0.
Correct.
And as you rightly mentioned, there is significant number of unbanked populations, even product and services in Islamic fintech. So now that we are actually, with the emergence of all these new technologies, there is need, for researchers actually to explore and see the significant or the impact of how these technologies can shape or promote, the adoption of Islamic fintech in the industry. So thank you so much, Sharjil, for joining us, and I look forward to meeting you again in our series. And so with me, Bilyaminu, I would say thank you so much, and thank you for joining us.
Thank you very much, Bilyaminu. All the best, and have a good
Thank
night.
you. Bye.